Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 17th of April 2022, and this week we're going to focus very much on investing and fundraising through crypto. So we're going to be talking about ICOs and STOs as they were in 2017 and 18, seed funding, basic fundraisers, different types of tokens, what the difference is between a utility token, a security token, and a crypto token. And exploring various options around that, what's happening in the market, answering questions in general. So I hope you enjoy this. Do remember to click the subscribe, click on the like, make comments in the YouTube comment section. We hold these meetings every Sunday at 7 p.m. UK British Summer Time. Everyone's welcome to join in, novice and expert alike. Take a look at the comment section below. You'll find the meeting details of how to join. I hope you find this of interest. Do remember to click on the subscribe, come and join. Let's see who's going to join us today. Hey, Adrian, how's it going?
Good, mate. Good.
Yeah.
4 a.m.
Well, yeah, you Australians seem to love early starts. Hey, Rob.
Hi, are you okay? Can you hear me?
Yes, certainly can. Loud and clear, as they say.
Good.
I thought everyone might have been off on Easter break, actually, today. I was almost wondering about if anyone would show up and what was happening in the crypto market. Does it all settle down? But as we all know, the crypto world doesn't stop for vacations.
No, that's what I like.
Yeah. And certainly, it's always interesting. Explain to people, actually, it is actually a 24/7, 7 days a week type thing. There's no stopping anything. So,
Hello.
Hey, Tambi, hi.
Hey there. How are you doing?
Hey.
Good. My name is Tambi. I'm based just outside of Greater London in a place called Uxbridge in Middlesex, just next to Bucks, I think.
I know it rather well. Well, welcome aboard. No idea how many people are going to join us today. I know you've not been on one of the calls before, so quickly explain. It really is open format. It's free and open to anyone to ask any questions. It's all about learning and sharing. We sometimes have novices who join us. We talk about cryptocurrency. We talk about blockchains. We've got some real experts who come and join us at times as well. So Adrian, who's got that lovely backdrop in the background, which really is his garden, I believe, out in Brisbane.
Yeah, it is my garden. That's my backyard.
Yeah. And Adrian's something of an expert in the distributed ledger world, particularly around the legal sector and standards as well. Adrian, are you on ISO CC307 or one of the subcommittees?
TC307. I'm on the smart contract committee, and I'm on the NFT committee, and I'm on the central bank digital currency committee.
Yeah, so some in-depth expertise on that side of things. And then for me, I've been involved in the crypto and blockchain space for about 6 years. I do education, consultancy, advisory stuff. And I set this group up originally simply because when I got my first Nano Ledger hardware wallet, and I was really nervous about, am I doing the right thing? Am I doing the wrong thing? And so I set up the group to build up like a kind of like buddy system, peer learning from each other. And that's why I say, you know, this group is open to experts and novices alike. So that's good. So tell me, what's your kind of background? Do you got any knowledge in this space then, or?
I'm pretty new in this space, maybe 1 or 2 years. I'm really a dabbler, and so I don't work professionally. I do other work on projects for a company called Capita. So it's nothing to do with my work. It's just a fascination of myself. So I'm still learning, to be honest. Yeah. So.
That's good, and that's going to be the case with many others as well. For most people, crypto isn't their main job, but they do take an interest in the learning that, and that's great. That's good. I see we're joined by, is it Anthony or Anthony? I never know.
And Anthony, well, I'm not first. So hello, everyone. Hi.
Hey there. Whereabouts you from, Anthony?
Well, the company's Seed Legals. I'm here in Blackfriars. You can see I live on the banks of the Thames and enjoying the late afternoon sunshine. I'm probably only going to stay until Deliveroo arrives, but I thought that I would join and I've been working on, I head up Seed Legals, so most startups these days are run on Seed Legals, do all their fundraising on Seed Legals, but I'm working on a new product called option tokens, and want to learn more, and I'll be at the Magna Carta event on Wednesday as well, and I think I'm presenting something there, but I thought I would join and say hi and learn more from the group.
Brilliant. Well, thanks for joining. As I was just saying to Tambi, it's totally open forum on these sessions. It's all about learning, and so if we have novices on who want to ask what they think are basic questions, but actually are always the really interesting ones, then that's great. Or if we've got people who are experts or working in the field and they want to share something, maybe something that's of news or something of interest, then again, I just encourage that. So with Seed Legals, are you doing a lot of stuff on the crypto side of things now? Or?
Not yet. So Seed Legals, we're about 160 people. About 1 in 6 of all early stage UK funding rounds is on Seed Legals. But I do want to create a crypto product. And so I've come up with a concept I'm calling option tokens, that for a company raising, they can set up their company to, just like you have an option pool. So you've got shares and you've got options. You can turn your option pool, in a sense, into tokens, and they will have some characteristics. And so my goal is I want to make it as easy to fundraise in a mixture of pounds to give SEIS and EIS to your angel investors, and crypto, which will then have a secondary market around it. So there's the nub of the idea. I was just on a call with a founder who, in fact, is looking for exactly that. So I think it's got some product market fit. I now need to figure out how to build it, which includes the FCA implications of the token as opposed to, an equity, and the legals for doing it. But I now want to essentially productize it to make it easy for somebody who knows about traditional fundraising to do a token raise as well.
So it's kind of like the ICO craze of 2017, 2018, version 2. Type thing, a kind of a blend in some way, is it?
Yeah, probably version 3 actually, because that was replaced by, I think, by STOs.
Yeah.
And now I want to. I think the problem is there's a lot of excitement and people want to do something in the space, but they don't know quite what it is. And it's often a mixture of buzzwords thrown in. There's some NFTs and there's a DAO and they're tokens. Some of it seems grounded in reality, and some of it seems a bit divorced from what you would think of as traditional value creation in a company. And so my goal is to see what can I create as a construct, and then create all the legals for it, so that people can, in a few clicks, create the structure they want and make it as easy to raise in a new way as it is to do a 150K SEIS funding round on Seed Legals.
Okay. So I guess you're getting into that space. Quite an interesting time at the moment in the UK in particular, and Adrian will probably have a perspective of what's going on in Australia. But for the UK, the government policy around the crypto space at the moment is to begin to acknowledge its existence and support it and encourage it and say nice things about how it's going to bring jobs and that.
So do we think that Rishi Sunak's comments are just PR, and the FCA will continue to be as recalcitrant as they have been?
So this is where I was going to go. There's 3 separate dynamics going on right now. There's the official UK government, crypto's good because it brings employment and opportunities, blah, blah, blah. As you say, that's the Rishi Sunak. And he's tying it in with kind of Bitcoin and a central bank digital currency, which admittedly is not a crypto. It's a different thing, but it's similar. You've then got, as you say, the FCA. So the FCA, I think, announced this week that they've just thinned out a load of the applications that they have for the crypto asset register. And they've just massively reduced it. So there's now far fewer applicants waiting to get registered simply because they've pulled out because they've got so frustrated or they've had enough. And then you've got Hmrc. And Hmrc is obviously Rishi Sunak's other angle with the Treasury of thinking of crypto as being a revenue source. And so again, they're quite supportive of that. And then you actually got a 4th area, which funnily enough is the Royal Mint. where the Royal Mint a few years ago launched
Right.
was about to launch a token, which was called RMT, so Royal Mint token, and this was gold-backed cryptocurrency, which was a real leader. And I know some of the team who were involved in that, working in Wales and the Royal Mint and that kind of thing, and they kind of killed that project off just at the point at which I think the government thought, hang on, we're about to launch a government-supported gold-backed cryptocurrency. There's something that doesn't quite feel right about that, and so they pulled it. But I think it's Royal Mint announced within the last couple of weeks that they are about to relaunch something,
Yes.
which sounds like it's going to be a token type thing again.
Which is either a damp squib because they don't get tokenomics at all, or actually quite interesting because it comes with some semi-official or official backing.
Yep.
Maybe they just do an NFT of the Queen on a, and so they get the official one, and then they move from coins to putting the Queen's head on an NFT, so a digital thing, yeah.
Yeah, and certainly think so. It is always a difficult thing of what the government says versus what the government does, versus what the regulators think, and then of course you got certainly the FCA's taking an interest in it from a protection of the consumer perspective, but they've also got a responsibility around systemic security, and I think they're still a little bit nervous about what cryptos could do to our economy and that kind of thing. But we'll see on that. So I wait with further interest to hear the developments that you're doing and the whole token concept around fundraising, because ICOs, for those who don't know, 2017, 2018 was where there was this massive growth of ICOs, which is basically a token that you could buy for which you had no rights and the company had no obligations, but it was a bit like buying tickets to go on a fairground ride, that you're effectively forward buying the ability to go on a bumper car, with the problem that the fairground operator didn't actually have a fairground at the point at which they were selling you these tokens, and had read a book around bumper car rides, and that was probably the limit. So a lot of them failed, went away. But as Anthony was saying, they then evolved into STOs, which are security tokens, which is where government said, hang on, it looks like this is actually an equivalent of an IPO. So it looks like it's a regulated activity you're doing, so please stop it until you get registered with us. Now, so I think we might be going through, as you say, the second or third iteration of that. We'll see what happens. So you got a reasonable network in London already, Anthony, around exploring this?
Well, it's a good point. So I am talking to the folks at Kronos Law and a few others, and I'm interested in finding people who can help. And I'm looking for really probably 3 classes of help. Number one, sanity checking at an architectural level, that it's going to make sense, so that there's some value created. If you strip away all the things that make it an equity, you may find that it stops being treated as an equity, which is great. It also has 0 value because all the things that make equity valuable, you've taken away. So the architecture is thing number one. Thing number two is the legals for it. So I have a team of lawyers at Seed Legals who know everything about funding rounds and articles and shells agreement, but crypto is not their strong point. So I am looking for some help on creating the legals for it, both to create the construct, but also to protect companies, because people trust our platform, that we're going to come up with the right answers. And I want to make sure that they don't just push some buttons, go, great, the platform creates some documents, and then one day there's a knock on the door, metaphorically, from the FCA. And the third piece is the mechanism for a secondary market and the technical implementation. So a key part of the construct is you've got your shares on your cap table, you've got your option tokens, which can be traded independently. The option tokens have fewer characteristics of a share. So they may be less valuable, but they've got a lot more liquidity, which might make them more valuable. And then the question is, most companies are not going to want to spend the time and effort of building their own blockchains and so on. So what out-of-the-box solution can I provide that might connect to OpenSea or some framework or something which provides the secondary exchange? And I don't know the answer to that, but I'm looking to talk to and hence here. So if there's anyone who can help on any of those or beyond, I would be delighted to discuss further.
I'd certainly suggest if you're not connected with me on LinkedIn, then
I did moments ago, so
there we go.
We'll follow up. Okay.
Yeah, that's an offer that I open to everybody, on the call or on YouTube afterwards. Feel free to connect. You'll find if you, in fact, even if you Google Gary Nuttall and blockchain, I'll appear up at the top of the list, and you'll find a LinkedIn thing on that. And also, I run a number of other groups as well. So I run the Blockchain Digital Assets Meetup group, which was originally called the ICO Meetup group, and it's probably the largest blockchain digital assets meetup group in Europe. We've got over 2,000 members, a large portion of whom are London-based. So we used to actually run events in London with friendly lawyers. So the likes of CMS, DLA Piper, a few others who are all going into this space in 2018, 2019, before COVID hit, were kind enough to host events and this kind of thing. And I've got a number of contacts with other UK law firms as well. Adrian, who's on the call today, I'm sure would be happy to have a chat. He's based out in Australia. But it'd be interesting to see what the Australian perspective is on fundraising and crypto and that kind of thing as well. I don't know.
I'm doing a lot of stuff with Saft at the present moment.
With Saft, was that?
Saft, simple agreement for future tokens.
Okay.
I've just reviewed one from Ireland, and I'm amending for Australia, dealing with some capital raisings.
Because Saft, go on.
That sounds like an Aussie accent. Sounds like an Aussie accent there, right?
It is an Aussie accent, yes.
Right.
I am in Australia.
Okay, cool. Yes, I see that. Yeah. Okay.
Yeah, that really is his background. It's not just a screensaver. But Safts they're the framework agreements, aren't they? That started being used a few years ago.
They were developed by Cooley LLP, Marco Santori in Silicon Valley. Started them in 2018. They are designed, the original Saft agreement was designed for US law, but you can adjust them for various jurisdictions. The one I've just read from Ireland, whoever adjusted it has no idea what they're doing.
That seems to be a common problem. So I was looking to see, can we make a UK version of it? The problem is it's so wrapped up in US legal nomenclature that it's a bit gobbledygook otherwise. But sometimes people just cross out the word common stock and put ordinary shares instead or something, but it's still lost more in translation. So have you come across a good UK or Irish one? Or is that something that you're looking to develop?
No, that's something that I could develop. But no, I don't know. I'd go and have a chat to Norton Rose. I find that they're probably the most, DLA Piper. I used to work with DLA Piper many years ago.
I was going to say quickly on that, Anthony, if you want to contact, I think I know the right person at DLA, who's a member of one of the groups I run. I'd be happy to do a mutual introduction or something.
That is fantastic. So my perception, and I'm slightly an outsider to that space, that it looks like, lots of law firms have done some work, but no one's come up with the answer. So you have to go hunting around and you find partial bits of answers. And what I like to do is productize it. And then in a few clicks, you've got one of those. So we've taken the an advanced subscription agreement. We call it a seed fast. It's the UK version of a safe, I guess, and we productize that, and we must do several per day on seed legals. We've done thousands of them, and they now are quite standard. So can we take the Saft and make it, to the extent that it's useful, it might complement quite nicely the ability to raise SEIS, EIS with an advanced subscription agreement for fiat, and then one for tokens. And that, if we can have them as, in a few clicks on the platform, set your terms and get a document, then I think it can advance it for everyone.
That sounds like an option. Have you had a look at if there's any equivalent with what they're doing in Switzerland? Or have you not kind of looked at other jurisdictions?
I have not. So our platform is currently mostly UK, but we're in Ireland, France, and about launching in Singapore and Hong Kong. So those are the territories. But again, I think that's one of the things that I'm hopefully looking to see if I can solve, which is the distributed piece of information. Oh, in Malta, there's one of these. Go to Malta and pick one up. And so can you go, if you're a UK company, this is the package of things, and then we'll replicate that in other territories.
So I was going to say, you got the advantage, at least with Hong Kong, you've got HKMA, and Singapore, you've got Monetary Authority of Singapore, so MAS. They are all quite similar in their approach for the FCA in terms of the attitude around crypto, although MAS I think is a little bit more favourable, certainly.
Right.
But it usually means what they come out with is similar. Malta is the one where Malta has positioned itself explicitly to be crypto friendly.
Yes.
And there was a competition between Malta and Gibraltar for a while as to which was the more crypto friendly jurisdiction. Gibraltar went down the route of you had to go through one of their advisors and go on to GBX, I think it is, which is the Gibraltar crypto exchange. And then Malta had a few political problems a little while ago, but they're re-establishing now. So again, I could probably put you in contact with Peter. I've forgotten his name now, but I think he's the attaché with the Malta financial regulator or whatever. Who's an ex, he created the regulations in Malta for the gambling side of things.
Right.
And effectively took a lot of the gambling regulation and rewrote them for crypto. And so Malta is quite crypto friendly. And the thing that people quickly realize, I'm sure you'll be aware of this as well, that actually the country in which you are incorporated does not necessarily be the driver behind the regulations you need to be interested in. It's the jurisdiction of your potential shareholders or your investors that can be quite important. So this is where Malta is quite an interesting one, because it's EU, and so that gives you some domain and is quite friendly. So again, might be able to help with something like that.
That's interesting, because that seems to be the opposite of with most contracts, which is the jurisdiction where the company's based is the determining factor, and it doesn't matter where the investor is.
So you look at what's been going on with the SEC, for example, in the US, and the US they've actually, there was a takedown notice against the UK websites in 2018, I think it was, because the SEC advised this UK company that was advertising its ICO and it was doing a raise, and they said, you're doing a financial instrument promotion to US citizens. And the company said, we've got a website, everyone can see it.
Yeah.
They said, yeah, that's correct. So you're promoting to US citizens, and it looks like it's a security to us, which means it's our domain, and we don't care where you're based. So that they had to take the website down. So yeah, it is interesting that a lot of the time it matters as much as to where your potential investors are coming from.
Yeah.
So,
they need to put up a US investor disclaimer saying I'm a high net worth or sophisticated investor or something. So, but I guess once the SEC's called you, you're probably better off just blocking the site. And yeah.
Well, I think that's it. You can either go in for, I think, is it a Reg A or a Reg D, or some sort of regulations where you can actually do a fully regulated security raise and do it with crypto. But it's incredibly expensive, incredibly complex.
Right.
So most companies, as you say, they just have a an IP filter and they don't allow people in the US to access it.
Right. Other than through a VPN, exactly.
Geo-blocking.
Yeah, which is why part of your KYC process is please enter your name and address, and if it's in the USA, sorry, it's not open to you.
Yeah.
An interesting one. Oh, good. Well, maybe I can help with some contacts on that in some way.
Right. And are you at the Magna Carta event on Wednesday?
No. And in fact, I guess if you go into that Peter, I would imagine, will be at that.
Okay. Yeah.
I think Balbia tends to get involved in those. For those who are on the call who don't know about the Magna Carta event, there's a place on the River Thames which is Runnymede.
Runnymede, yes.
Runnymede, yeah, which is where the original Magna Carta was signed, and this was the thing. Yeah, that's right, yeah, and that was all signed, I believe, at Runnymede, and that's now that considered as the original site of the founding of Magna Carta. Which means it's got incredible relevance and significance to English history, and the Chinese bought it, which is quite bizarre. So the Chinese have bought, I think, the actual building and some of the land around it, and are now using it as a springboard to promote crypto activities. And it's fascinating how the world goes around. Like, you've now got the Chinese at the home of where England was kind of founded in its modern day.
But I think the philosophy is that the Magna Carta is where power went from the monarch to the people, and Parliament got power in 1252, I think. And now this is the redoing of that, where DAOs and democratizing equity and things like that, and hence actually looking at Magna Carta Island to do it again. Back in 12, so there was another blockchain one a few months ago, and I went. It was quite nice. The room where King John actually signed the Magna Carta. Apparently, he was given two options for leaving the island. One, if he signed on a horse, and the other way, I think, down the river under the water if he didn't sign. So yes.
Well, which has always brought up the interesting question about the enforceability of the Magna Carta, because it actually means that he made an agreement under duress, and technically an agreement under duress isn't an agreement, or sorry, isn't an enforceable agreement. So I know there's a bunch of people who've been complaining about that for a while as well.
700 years, yes. Exactly.
Exactly. So fascinating stuff, and it's amazing, isn't it? I always say that in the crypto world, you see these cycles of things repeating themselves. And then in the wider financial services sector, you see things repeating themselves. And now we've got a situation of a massive reemergence, as you say, a potential big transfer of power originally in 1215 from the royalty to the people, in theory. And now with crypto, you may see a reemergence of the people taking control again through crypto, which is fascinating. And then we've got CBDCs, so central bank digital currencies, which are related to crypto, which give control back to the governments again. So
right, exactly.
It all goes around in big circles type thing. Sorry, Tambi, that was probably quite a journey off in a different direction from where we may have gone. I just wondered if you've got any general questions or anything with joining us today.
No, then yeah, probably 1,000 questions, but I wouldn't know where to start. But is it Anthony? I might, in your quest to piece together puzzles of pieces and stuff, I might have a lead for you on that one.
That would be awesome. Thank you.
Yeah, I've got a friend who I think he worked at Latham. What is it called? Latham Watkins or something like that, and he worked on.
Oh yeah, Latham Watkins. Yeah, okay.
They worked on the deal with Coinbase, so I think I might just have somebody that can.
Fantastic. I'm Anthony Rose on LinkedIn, or just Anthony@seedlegals.com.
Cool.
That's always a useful thing about sessions like this. I ran one at the beginning of the COVID lockdown, and I found it fascinating. It was not a crypto-related one. It was actually it was a crypto-related one. I just decided to run a session because everyone had spent a month getting bored, locked in their houses. And I ended up putting together someone in Hong Kong who was a hardware manufacturer with somebody in the UK who was an NHS provider who was desperately looking for PPE at the time, and the hardware provider in Hong Kong
Right.
happened to specialize in pharmaceutical equipment. And I was fascinated. It was just three of us on a call. It's like, you need to speak to you, connect them type thing. So, yeah.
Well, thank you. I have to run, unfortunately. Thank you so much for the advice and for meeting, and I look forward to being part of the group further. And so, Gary, I saw you posted in the blockchain WhatsApp, so we'll meet again there. And Tambi, good to meet. Rob, you've been silent so far.
Rob's a great listener.
Yeah, it's all a bit out of my depth. So it's all a bit over my head at the moment.
Well, Anthony, do join us again. We run this every Sunday anyway, so it's open to all. Reach out directly, as I say, and also run, as I say, for anyone who's interested in blockchain and digital assets meetup group. So you can check that on Meetup. We've not had any physical meetings for a while. That'll probably change soon. But yeah, everyone's always welcome. So Anthony, hopefully see you again sometime, and enjoy the delivery.
Thank you very much. Thanks all. Bye.
Cheers.
Take care.
And then, Tammy, then you were saying there were loads and loads of questions. Is there any that off the top of your head?
No, I was just trying to understand what Anthony was really talking about. He mentioned, is it seed fast and save and some legal stuff he's trying to put together, obviously, for his project, but then I just got lost. And yeah.
Okay, so it's probably worthwhile explaining it in terms of, if you think seeding, or so there's various organizations like Seeders and Seed Legal and this kind of thing, that they help companies or startups raise money. So you think about when you're a startup initially, very small scale, you go through various stages. The first stage is known as the 3 Fs for fundraising, which is families, friends, and fools. And these are basically, people that you say, hey, I've got this great idea, I need some money, and you go and borrow some money off them or whatever. But when you get a little bit more serious, you then need to do some proper fundraising. And this is where seed organizations get communities of people to put money in. So I'm trying to think of some of the other big ones. There are a load of platforms that do this now that allow you to put money into things. And that kind of thing in the UK, that's been happening for probably about 15, 20 years now. And initially, crowdfunding, as it was kind of known, was unregulated. And for a while, crowdfunding of startups remained unregulated and was self-regulated. So the regulator said, you're too small for us to worry about, and we're really interested. Then they suddenly realized that a lot of people were putting money into things and they were losing the money. People losing money always interest politicians, because at some point, Granny is going to lose her money under the bed. So the politicians speak to the regulators introduce rules, and it all gets really boring for a while. But at the end of it, you've got a regulated environment. Then crypto comes along, all these crypto tokens and everything like that. And that gives you another route, that instead of saying to people, lend me some money and I will give you some shares in return, or I'll give you write it out as a debt or something, I will give you crypto tokens that are worth a nominal amount, but you buy them off me. And I then use that money. So that was what ICOs in 2017, 2018 were basically about. And this is the whole thing where I describe it as, it's a bit like going to a fairground and paying to go on the dodgems. And they give you a token that you then go over to the dodgems to put into the machine type thing. That was what ICOs were. And so seed funding on crypto is kind of going through that again at the moment. Adrian, I don't know if you've got any other views on where you think the whole crypto and early stage investing is going at the moment.
Well, the big thing is that the regulators have come down very heavily on what are generally called ICOs, IEOs, or STOs, whatever you want to call them. You can break crypto down into three major categories. It's either a utility token, a security token, or a pure digital currency, much like Bitcoin or Ethereum are regarded as, because of the decentralization associated with those particular types of tokens, they are regarded as a cryptocurrency, and therefore they're not a security. Everyone wants to avoid being classified as a security. Now, a utility token is a token, in the US, they're actually moving away from the term utility token to a consumptive token. Now, consumptive means that the platform actually, you need the token to use the platform, but the token gets consumed by the platform. So it's more like if you, Gary mentioned crowdfunding. What you're doing there is you're going to say, I want to build this new type of vacuum cleaner, but I need $3 million to start production. What I'll do is I will pre-sell enough vacuum cleaners now, even though I haven't got them now, so that when I do get production, you guys will get those vacuum cleaners. I did it recently. My daughter is quite a well-known potter in this country, and there's a called Isabeau out of China, and they had a 3D ceramic printer that they wanted to enter the market with, and so I put in $900 US, and 6 months later, when they were able to raise, they were only supposed to raise $10 million US. They end up raising $86 million US out of the whole thing. And so I then got my product, even though at the time of my investment, that's crowdfunding. So the way a lot of organizations are now looking at it is, why can't we do the equivalent of a crowdfunding exercise, but for the provision of a service that the platform will provide in the future? So what you do is you say, okay, I've got this, I'm going to build this U-Butte state-of-the-art identity management system for banks, in essence. And so I'm going to sell all of these tokens, but you need the token to actually use the platform once it's been developed. And so therefore, if I sell them to you, Tambi, right, and it's a success, who's going to buy these tokens off you? Banks, because they want to use the identity management environment for their KYC. So you need to look at behind of what the utility platform is for, assess that, and then you might want to buy those types of tokens. And the last one is just a pure security, whether it's an investment in a managed investment scheme, a share in something, a derivative, a debenture, all of those things in both the UK law and modern jurisdictions across the world, they're all securities, right? And so if it's a security, then you have to follow the rules in relation to the issuing of securities. And that usually means you have to produce what's called a disclosure document with the FCA in the United Kingdom, and the disclosure document is usually known as an IPO, initial public offering of, and that's very expensive. And it's expensive for a couple of reasons. Number one, you have to get a qualified accountant or accounting firm to do a complete audit over the environment and sign off to that. And so they've got their liability to the FCA saying that we've actually done all our job. Then you have to have lawyers involved. And again, there's liability. So they're not cheap exercises if you're going to go down a disclosure document. And that's why most organizations these days are looking towards the issuing of utility tokens, or they might want to use a Saft agreement, but a Saft agreement is very, SAFT, stands for Simple Agreement for Future Tokens. You actually issue two types of tokens. One's a holding token, and then when the system is completely up as a utility, you then swap those tokens for the utility token. That becomes a consumptive arrangement. You can't sell the the first type of token. It's captured, locked in through a smart contract arrangement. But once it's there, then there's a one-for-one swap over or some sort of ratio. It might be 1-for-10 or whatever. It doesn't really matter as long as it's consistent across all entities. So they're the three types of tokens. That's how they're usually used. It's either a cryptocurrency, a utility, or a security. And most people avoid the security issues.
So that's probably the thing that a lot of people who are into crypto are into cryptocurrencies. So, you know, Bitcoin, Ethereum, all the normal trading there. That's where you'll see the charts of prices going up, down, and people saying Bitcoin's price at the moment, you know, oh, it's a whatever type thing. A lot of people in the crypto space are just into that area. Then you've got the whole thing of using crypto as a form of fundraising, which is where you start going through, as we said before, the ICO, which was initial coin offering, security token offering, and then there are all sorts of other three-letter terms that came out. In essence, it's using tokens as a way of generating money to run a project or a company, so simply put. So when you see all these different logos all over the place, some of them are cryptocurrencies. So if I can get that one, which is Bitcoin, that is a cryptocurrency. Some of the others might be crypto tokens. Some of them might be crypto assets. There's a whole range. The most amazing thing is that they're all typically tradable on exchanges, and you don't actually know the difference between them. And for a lot of people, they don't actually need to know. So you may hear a term of an ERC20 smart contract. So that is a token that is managed by a bit of software which adheres to a certain standard on the Ethereum blockchain and looks and behaves like a cryptocurrency, but is actually a dedicated token in some way. And then you've got another type of token, which is quite often based on Ethereum. You might hear the term an ERC721. So that is an NFT, which is a non-fungible token. And this is the current craze that's going around of having NFTs of digital art or music or whatever, where again, it's just a bit of software sitting on the blockchain that's created a token that gives you the evidence of ownership of an underlying asset. And people end up paying millions of dollars for things like Jack Dorsey's first tweet to say, I've got this NFT, which is Jack Dorsey's first tweet, and he raised millions of dollars for it. And I think that went up for resale and was worth a few $1,000s or something. So it completely collapsed.
Oh, it's worse than that.
Yeah.
The Jack Dorsey one, it was sold for about $3.2 million to Jack Dorsey, who donated it to a charity. There's now up for sale again, and the person who holds it wants $87 million for it, and the highest bid so far is $297.
Bit of a disconnect.
A slight disconnect, but the real thing is that the idiot paid $3 million for it, and the highest bid that someone else wants it is $297.
Yeah. So this is interesting. So is it the SAFs, SAF? Is it?
Saft, SFT. Yeah.
So I beg your pardon?
SAFT. S for simple.
Yeah.
A for agreement.
Yeah.
For future, F. Tokens, T.
Right. So is this a predominant way that startups in this world would then be initially looking to raise or crowdfund, and then what's then the purpose of the platforms I've heard of. I've never used them. I don't quite fully understand how they work, but I think it's the loan platforms, like I don't know whether it's AAVE or some of these platforms that have contracts.
Well, no, AAVE is a bit different. AAVE is a DeFi platform, a bit like AAVE is a platform whereby the tokens are utilized for what's called yield farming and liquidity pools. They're completely different. Okay, they're an unusual new construct that's come about since about late 2019, 2020, and they've done very successful. I mean, AAVE is produced. The chief scientist behind that is Enam Gunsura, who's professor of crypto at Cornell University. Very well respected, highly knowledgeable in this area. And there are others as well, right? I mean, you go to Algorand and you've got Silvio Micali, who won the Turing Award about 15 years ago. So you're getting a lot of these computer scientists now getting into this area who are real crypto experts. And Eamon is like not only very good at crypto, but he's got a really solid business background as well. But AAVE is a different structure all over again.
So as you say, there are a bunch of different platforms. So you start off with, you know, the baseline cryptocurrency platform, so the exchanges.
Yeah. So
you know, you got the likes of Binance, Kraken, Coinbase, all normal ones which are for cryptocurrency trading. Then you've got the ones that specialize more in the DeFi side of things. So DeFi being decentralized finance. So as you say, AAVE is quite well known in that space. And there's a number of DeFi-based platforms that either do cryptocurrency trading or provide things like yield farming, flash loans, these kind of things newer. Then you've got another set of platforms, which are the NFT platforms, which are the ones that specialize in things like digital art. So you look at OpenSea's, Rarible.
Yeah, OpenSea.
There are a couple of leading ones where if you're into buying and selling BAFT, so what's that, Bay Area, sorry, not Bay Area, the crypto, the NFTs that are like apes. You've probably seen the ape imageries, that kind of thing. But yacht one, that's right. Yeah. So you get some platforms that kind of specialize in those. Ultimately, NFTs, so this is the thing that you see with digital art, ICOs, which is what you're seeing with fundraising, and cryptocurrencies, they're all pretty much variations of a theme that they're all tokens in some form, programmatically controlled. And so they can all be traded across all sorts of different platforms, which is where you then have another set of platforms which allow interoperability between them.
Yep.
And this is where you might hear the likes of Polkadot come into play. Yeah. Polkadot being like cross-chain interoperability and all this kind of thing. So it's fascinating. The more I talk about it, the more I realize just how vast and massive this space is.
See, what I'm understanding is why would he then go down the Saft route, if I understood correctly, as opposed to going down the DeFi route where he can raise funds in the DeFi space and maybe dabbling in the Polkadot space. And I think there's a thing called centrifuge or something like a real world asset financing platform that allows people almost like a traditional way, but all on the DeFi space. Why wouldn't he use something like that? Or
I'll offer an opinion on it, and that's that the problem with the DeFi space, and it's either a problem or an opportunity, is it is unregulated. And that's good if you don't like regulation. It's bad if you hold a qualification and are a professional and you are a practicing lawyer. You don't want to go dealing with unregulated environments. So
that's true.
So you would probably stay away from a lot of DeFi things because of the nature that they are unregulated, they are decentralized, Some of the platforms, it is exceedingly difficult to find out where they are actually based, that kind of thing. So a lot of firms will stick with what they know and who they know. And so they'll only work with platforms that do what's known as KYC, or know your customer checking. This is the whole, what is your name, address? Are you a real living person? Are you an accredited investor? All this kind of stuff. And what country do you live in?
So doesn't that then make the need for the use of a token on the blockchain, using blockchain technology, almost redundant? Then why not just stick to your traditional finance ways of raising funds? Well, why even try and even dabble then in this sort of? Because
one of the great things, if you think about, if we made a switch and we simply migrated an existing security that is regulated, so as an example, shares, shares in a company. At the moment, you can find out details of what shares you own, but you can't find out details of any other share ownership unless it's above a certain percent and it's broadcast in that. If it's on a blockchain, everyone has got access to the blockchain and everyone can see how many shares have been issued. You may not know who the shares have gone to, but you can see how many shares are being traded. You can see when the ownership is changing, how many shares in total have been issued, all this kind of thing. Whereas with traditional shares, you can't really do that. So an advantage of a blockchain-based environment is the transparency level. Yeah. So sure. it gives you the visibility, and it makes it more accessible. That at the end of the day, as long as people in other countries are allowed to buy and sell in these markets, then it opens it up. And also, Anthony mentioned things like secondary markets. So one of the things about crypto is that not only have you got the primary space of the main blockchain and people can buy and sell things, but you can then go off and create your own little trading platforms yourself if you really want to, which you can't do with a regulated financial instrument. It has to be traded through a regulated exchange. So if you want to buy shares in a UK listed company, it is a company that is listed with the London Stock Exchange, and that's the only platform you can go through. Whereas if you're a UK company who have come into existence through crypto in some way, then there's no limit. That there isn't a London crypto stock exchange. So people can go on to Binance, Kraken, Coinbase, or whatever type thing. So that's a view on it anyway. Might not be the right one, but it's a view. So any other questions, Rob? You're nodding there, and you just digesting all of this.
Yeah, when you were explaining that, I think another thing that that the crypto world offers is the speed that you can raise money at against the traditional ways of doing it. Is probably a lot faster.
You're right, and it was interesting. In 2017, I think it was, I was working with a startup, and they were using blockchain-based technology in the insurance sector. Really interesting team, got a great bunch of people. They know the market, they understand it. I've been involved with them since then, and it took them absolutely ages and ages to do a fundraise, and they were not looking for much, a couple of $1 million or something, but they had to go through the beauty parade with the VCs and all this complete pain in the proverbial. At the same time, there was another group who started up, who again, they were in the insurance domain, and they did a token raise, and in 3 days they were hacked twice. They restarted again. They then stopped their fundraise early, and I think they raised somewhere between $8 and $11 million. And that was just in a few days type thing. So you're absolutely right that the amount of money that you can raise quickly in the crypto space is quite powerful. And you get some of them. I used to track ICO fundraisers, and some of them would be raising like $200 million in a week type thing, which if you're doing it through a traditional investment of doing an IPO and going around all the funding houses and that would take months and months and months. So
yeah.
So again, Tambi, sometimes crypto can be attractive because it can be fast. And then the other thing is, and it's this difficult challenge, that one of the benefits of it is it can be decentralized. And one of the drawbacks is that it can be decentralized. So it depends where you sit regulation wise as to whether that's good or bad. So I don't know, the last few minutes, again, the hour has kind of flown by. Any final questions or comments or anything anyone would like to share?
Okay, I've got a quick question for people that know more than I do, which isn't difficult. I read a post about a platform called, is it Whitefin or Bluefin? I'd have to let me just Google it. And it's basically where you can stake your tokens, and for 12 months on pretty much everything, they were offering nearly 30%. Now, is this legit?
So
Remember the old saying, if it's too good to be true, it ain't.
Yeah.
That's 30% in a year, is it?
Yeah.
Okay. I ask simply because I've heard some absolutely lunatic type things. So the good test to begin with, and Adrian's spot on there. If it sounds too good to be true, it will be too good.
Well, it's called Whitebit.
Yeah. Okay. So the starting point is, do they guarantee that return? Because if they do, it's not legit. So simple as that. No one can absolutely guarantee a return. And that's why if you take a look at any organization that's FCA regulated in the UK, you've always got the there used to be a saying that the FSA, in fact, which was predecessor to the FCA, was please note that past performance is no guarantee of future performance. Good indicator. So I always say that if they are guaranteeing a return, straight away that's a red flag for me. I get incredibly, because you just can't guarantee these things. If it's crypto based and the crypto market tanks, they've got problems. Ultimately, so I'm always suspicious about that. Whether this particular one is legit or not, I don't know, because I've not looked at it. But I see a lot which are offering. It's quite funny. You get them a lot on WhatsApp and Telegram groups of got this brilliant deal where you invest $500 and we'll turn it into $5,000 in 10 days. Absolutely guaranteed, absolutely certain. And so occasionally I reach out to them and say, so this is guaranteed, is it? You're going to 10 times my investment in a week. And they go, oh, yeah. And you only have to put in $500. It's not matter. So, okay, great. Count me in. Fantastic. Just one thing, though. I haven't got any money at the moment. Could you just lend me $500 and I'll put it into your scheme, and then out of $5,000, I'll give you $1,000. So you're doing really well out of it, and I'm doing really well out of it. And they then turn around and say, "You being serious?" It's like, well, are you?
Yeah.
Anyway, so folks, we're going to have to finish off. I'm afraid it's the witching hour. It's 8 o'clock in the UK. So we're going to close off, say thank you to everyone who joined us. I hope it was of interest and entertaining as always. And for those who are watching this on YouTube, do remember to click on the subscribe or come to a future event. Have a great day, folks.
Right.
Okay,
Take care.
Bye now. Bye now.